Markets are selling off today after the economic data that we got, specifically inflation expectations, went up at the highest degree that we have seen in over 2 years. And a fun fact, last time this happened, besides once in 2023 after the banking crisis, was during the September and October lows. So these 1 year inflation expectations do have a big impact on the markets. And not to say that we're guaranteed going to hit some new lows here soon. The precedent does not look good. Markets are catching that red candle. AMC stock is down about 3.32% at the time of recording this video. Now, we're going to get into a lot of key things here. Yes, we'll talk about the economic data. We'll talk about everything that is happening here on the day today. We'll look at the bond market. That's a big story on the day. But we're also going to take a look at the technicals on AMC, the data on AMC, and a couple different firms that are increasing their position in AMC by quite a bit. So I think that is also something that you guys would like to hear about. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. And if you guys want to come trade with me live in real time as well, link down below in the description of this video. So number one, let's talk the economic data. Let's talk about what is happening today before we get into anything else. And if you take a look at the bond market, bond yields are going higher today. And this is because the other economic data that we got, right? When inflation expectations go up, it tends to lead inflation up. And that tends to lead the Fed to raise rates more. And that's a big reason why the bonds are up so much today. But the 2-year bond is really the outperformer here. And it's now back to 4.10%. It is up over 12 basis points on the day. This is the shorter duration treasury that really the markets like to trade around. And as you know, it did recently climb to about 5% in the beginning of March of 2023. It's come down about 1%, 100 basis points. That's really where you've started to price in the rate cuts in the bond market by the end of the year, and what has helped give us this last big push of bullishness. Well, now that you're seeing that going higher today, and potentially the only reason why the markets have rallied is because of Fed rate cuts down the line, or these perceived Fed rate cuts. And I would argue too that inflation is coming down. Those two things are the only reason the markets have rallied. Earnings expectations have dropped 6 to 10% for Q1 just in the last month and a half here. So you've seen the earnings multiple really expand, and that can only happen if, one, we avoid a recession, number one. Number two, if the Fed does start to give us rate cuts by the end of 2023. After this inflation report, that's not looking so likely. And if we go ahead and take a look at this inflation report, we'll go ahead and pull it up. It came out in the Michigan Consumer Sentiment Survey. Now the actual survey itself came in strong at 65 or 63.5. You were expecting 62. So consumers are actually feeling pretty good about the state of the economy compared to what our expectations were. And the 5-year inflation expectations, which this is a positive, is flat. It's been flat since September and October, where it did start to go up from 2.7% to 3%, and now it's been at 2.9% for literally months and months now. But the Michigan inflation expectations, the 1 year ahead expectations, you were expecting a 3.6% reading on this. So you were expecting the same reading as we got last month to stay down here by this blue bar. It came in at 4.6%. That was 1% higher than expectations. And I mean, just take a look at this chart. This says it perfectly. This is July of 2022, right? When we were in the thick of it. Expectations started to fall. Markets were like, okay, you know, are things getting better here? Maybe. June, July, August, we've seen a rally during this time. If you want a visual reference here, we'll go ahead and pull it up. This was the July, August rally. It was very aggressive. You hit 430 on the high end. And then what did you start to do? You started to sell off throughout September and October. I would argue a lot of it is because inflation expectations from September till October actually went higher. And that was the first time that had happened in really a long time, right? Since the beginning of 2022. And what happened? You hit that peak in October, markets hit a low, inflation expectations started to go down pretty consistently. The only other time they went up was in February, and it was only about a third of a percent that they went higher. Now you're getting inflation expectations going 3 times higher than our expectations, or what the difference was between January and February. I mean, the comparison of these bars is huge. So people are really scratching their heads here, and the markets were very bullish in the beginning of trading today until this data came out at 10 o'clock. So I think the sole reason the markets are selling off today is because of that. Retail sales did come in a little bit worse than expectations, but really not a big deal. You were expecting a negative 0.9% reading. It came in at negative 1%, so barely worse than expectations. And you also had bank earnings that came out today, which were a lot better than expectations. You have JP Morgan up 7%. I believe it's Citi up 5%. PNC was up a lot. Wells Fargo was up like 3%, basically across the board. And that really doesn't help the thesis that the markets have been rallying on as well, that if the banking crisis gets worse, the Fed won't be able to raise rates. That's not what you're seeing today with the bank earnings. So on multiple different fronts and data points, it doesn't look like they are suggesting the Fed should pause or cut rates anytime soon. And when that's the reason why the markets have been rallying, that's a negative thing. So from here on out, let me just briefly cover that before we go ahead and dive into everything AMC that you need to know. From this point on, earnings are going to be key. So next week, you're going to get important earnings. The week after that, you're going to get most of the tech companies that report. And then that week of May 5th, that option expiration of May 5th, you're going to get your Apples. You're going to have all of your earnings out the way the markets are going to care about. And that's where the pain could really come, because if multiple expansion that we've seen in 2023 was futile and it's not coming because of these things that we've talked about here in this video, the Fed's not going to ease after inflation expectations just skyrocketed, right? At the same time, earnings are dropping more than expectations. That's a recipe for disaster. And Mike Wilson also came out with his note yesterday, still calling for that 20% drop in the next 3-ish months, guys. So there you have a rundown of what is happening today. You're getting some secondary data points as well. But as far as affecting the markets, these things are it. Now, if we go ahead and take a look at AMC, AMC is down about 3%. Like I said, now it's down about 6%. Holy smokes. And I just cut the video to see if I could find any news on this drop that we are getting with AMC, and I cannot. The stock is now down about 7.3% right here and right now. There's no telling what could happen here in the last few minutes of trading. Holy moly, it looks like someone somewhere knows something, but let's not get too far ahead of ourselves. We've seen some weird moves with AMC stock before. Now, let's go ahead and dive into some of the info, and let me just be clear, if something does come out here in after hours, more than likely, if we do get any news, I will bring that to your guys' attention at with the quickest urgency I can, because that's been a very strange flip on the day. It's like a 10% round trip that you've seen with AMC stock. Now, on another note, AMC stock is on the threshold securities list again. Live short interest of free float sitting at 26.11%. This is a multi-year high for the short interest on AMC. And you do have about 135 million shares that are currently sold short. Cost to borrow average at 342.94%. Cost to borrow max at 372.48%. And cost to borrow minimum sitting at about 8%. You are looking at about 100,000 shares that are available with the cost to borrow rate of 250.65%. Option activity for the day: 93 orders totaling $14.42 million, positive order value of 17%. And if we take a look at that expiration for AMC on April 28th, this is one day after the court date on April 27th. So a lot of people are betting for a big move. And you do have a calls open interest number at 21%, puts sitting at 78.96%. This has actually gotten them a lot better than obviously where it was at the start of the week at about 9%. Now sitting at 21%. It does coincide with the green days that we have seen and this open interest number going higher, right? There was like no call activity for April 28th. Now you're getting a little bit more than that. And like I said, I'm not sure if I said it, positive order value of 17% here on the day is pretty negative. Now, AMC on the threshold securities list, FTD numbers for today at about 2 million. Yesterday, you were also on the threshold securities list with about 1.8 million FTDs. Now, over this weekend, this will update and we will get a new reading that ultimately will show us a lot, right? If we start to go back up to 5 to 10 million FTDs next week and the week after that, well, we have a big problem here. Now, AMC stock is down 8.5% at $5 per share flat. You have broken down under the 100-day and the 200-day moving averages here today. The high of the day was $5.75 per share. So that's a 75-cent round trip today. That's a huge move. That's a very big candle, guys. So that's probably going to do it here for this video. We did cover a lot. I want to see what is going on. Actually, before we do that, I did say we would talk about some new stakes in AMC. And briefly right here, it says American Century Companies, for an example, increased its holdings by 17.5% during the first quarter of this year, while Cambridge Investment Research Advisors saw a 49.4% lift in its shares. Pagora Asset Management increased its stake by a considerable 141.2%, and CIBC World Market Inc., the Prudential PLC, also took new positions in the company in Q1. So it's really the arbitrage trade that has done a lot of this negative to AMC as of recently, right? We know that. Some people, it does look like, are taking the opposite side of that trade. Personally, I think you're insane to be shorting AMC right now when this is not a done deal by any means, guys. So that is going to do it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and I will see you in the next one.